much for joining us. And, you know, really, just as a bit of an icebreaker, what I'd love to hear from people, and please feel free to pop it in the chat, but if you could change one thing about making your life as a locum or locum life a little bit easier, what would that one thing be? We would love to know how we can make locum life that a little bit easier for those that choose that independent approach to the profession. Locuming has come so much more popular over recent years, and I think with the ongoing changes in the profession is going to become even more important that we get the support structures for locums right for the future. So what is it that could be made a little bit easier? And if it's something that we can answer tonight, we absolutely really would love to do that. So at this stage, I think I'm going to hand over and introduce our wonderful speakers for this evening. So first of all, I'm going to pass over to Molly Fiander, who's going to tell us a little bit more about management for locums and why she loves helping locums, and particularly the help that through VetYou can bring. And we've also got Rhys Thomas this evening, who's the managing director and a tax consultant with WTT Consulting. So we really do have an expert panel to be able to answer all of your questions and tell you a little bit more about taxes for locums. Molly, over to you.
Thanks. So yes, as everyone knows, my name is Molly. I've been a registered veterinary nurse now for about 6 years, and I fell into locuming. I actually became a locum 6 months qualified, so really, really early on. And because I was so early into it, I made a lot of mistakes. So about sort of a year after that, a lot of mistakes later, I started my own business, helping veterinary professionals, vets and nurses become locums, and become locums in the way that will suit their unique lifestyle, where it is, you know, booking shifts and their finances, anything like that. I help them understand it. But when I've been doing it, it's all been through guidance. It's like I said, it's been through my own mistakes. So when VetYou came about, and they offer all of these professionals, these experts about taxes, about, you know, all sorts of finances that I didn't even know existed, I was like, finally, I actually have a way of helping these people a bit further on than just the guidance on how to be a locum through this industry. Because it's so important, and it's so scary to actually take control of your finances. Like I've never done it before until I started locuming. So, you know, you become really sort of, you want to be secure within it, and then to be able to have a community like VetYou around you that can then also offer that support. Yeah, it's been life-changing for me, and I know it's been life-changing for a lot of locums that I've pointed in the VetYou direction. And, you know, there's loads of processes when it comes to locuming, and it's not all about finances. You know, we are booking our work, and I know that there's been a couple of people mentioned about corporates and agencies and things like that. So with management for locums, very, very soon, I will be introducing a platform which is going to streamline all of that. So all of the communications, all the bookings, all the finances, your timesheets, your invoices, your direct communications, that will all be going through one platform, as long as you want to use it. But it'll be coming out very, very soon. So I'll pop a little link in, I'll put my email address and stuff if you want to know more. But from a locum point of view, been doing it for so many years, it's a bit life-changing with all the admin side and everything. This is literally going to be 3 easy steps to your locum journey. So yeah, really excited, and I'm really excited for this webinar.
Great. Thank you, Molly. And that is probably the most exciting thing about our profession, is the flexibility that a career in veterinary medicine, whether you're a vet, or whether you're a vet nurse or somebody else in the support team, it's such a wonderful career to have that flexibility of looking at different areas to work in, the opportunity to jump in and out of the profession without it limiting your long-term development and career goals. But with that flexibility comes all that responsibility of making sure that you have life's necessary pieces of the jigsaw puzzle nicely lined up so they slot into place at the right time, and getting yourself planned ahead for your health, for your income, and for your future is absolutely vital. And you know, clearly, you know, paying the right taxes and understanding how your finances are affected by taxes. And dare I say, in planning for taxes to minimize your tax, it's absolutely a responsibility to pay the appropriate tax, but none of us want to pay more tax than we absolutely need to. So making sure we get the structure of our employment correct and getting the right planning for the future is, you know, vital for that success, that independent success as an independent locum. And at this point, I'd love to hand over to Rhys Thomas, who really is the expert in the room when it comes to talking about taxes. And, you know, we've had such great interactions with Rhys, with VetYou, some wonderful private messages coming through about how Rhys has helped them to support and structure their employment as a locum to make sure that they're benefiting from the most efficient way to support themselves and to pay their taxes. So Rhys, please, the floor is all yours.
Thank you, sir. Good evening, everyone. My name from this slide here, Rhys Thomas, as kindly introduced by everyone. A significantly more serious photo than Molly's there, and with this unflattering angle of my camera as well. I'm not giving the best impression, but as that says, MD tax consultant at WTT Consulting. WTT Consulting is part of a group company who I will introduce now. As I said, I'm the MD. We're tax and legal advisory experts to the locuming industry and freelancing in general. We help locums, agencies and practices in a very wide array of matters, and tax and legal is the key there. We are a CIOT regulated tax firm and an SRA regulated law firm, giving advice to all levels of the supply chain. For locums, our expertise include, but are not limited to, IR35, which is that really exciting thing that we're going to talk about tonight, accounts, tax return filing, which is that other really, really exciting thing that we're going to talk about tonight, contract reviews, and tax compliance. So this is a bit of a whistle-stop tour through all things that I have considered to be something that locums should be thinking about when they are considering doing a bit of locuming on the side or a career in locuming. Clearly, we've all seen a significant rise in those opting to move into locuming, either as a way to supplement their salary or as a way to actually work less and earn the same, or in some instances earn more. And we're certainly seeing, we have seen for a little while now, a continued increase in locuming in the veterinary industry. And it might be something you're all thinking about, it might be something you're already doing, it might be something that you're incredibly frustrated with. I can see with the chat also some frustrations around IR35s and the corporates, so no doubt we'll come on to talk around those. But as I say, this is a summary of what I think locums should be thinking about, but it's by no means definitive. So please do just shout in the chat function anytime throughout the session if there's questions you have or things that you can answer, that I can answer and help with at any point. Molly, if I could ask you to have a look on the chat as well, that would be fantastic, so that I'm not doing both.
Yeah, of course.
Brilliant, thank you. So the agenda is, what are the different ways to operate as a locum? What are the key tax areas I need to be thinking about? The dates, key dates to keep in mind. Is IR35 important to me? And operating as a locum, particularly in the veterinary industry where there's a hell of a lot of confusion going around in the industry, the answer is invariably yes. And then there'll be a more formal opportunity for question and answers at the end. But as I say, if you've got any questions throughout the session, please do just put them in. Okay, so the three kind of most common ways of operating as a locum are employee / as an umbrella, as a self-employed sole trader, and operating through a limited company. So we're going to talk through each one of those three, the slight differences, what the key tax rates are, and then we'll put forward a worked example for each so that you can see the differences in your take home of what you would expect to receive. So the key points of an umbrella, lots and lots of people are being asked to join umbrellas by practices and by agencies these days. If you've worked as a locum, I'm sure you have no doubt been asked to operate via an umbrella. Lots of people consider it to be the most easy. Certainly from an administrative perspective, everything's taken care of. At the same time, as an employee, everything being taxed at source, paying both employers and employees national insurance, means that this is the most punitive by way of deductions being taken away from you, and also the most restrictive in terms of expenses and deductions you can claim. Hence why lots of people tend to, or lots of locums tend to try and move towards limited companies, which we'll talk about shortly. But it makes sense to talk around umbrellas because most locums are now being asked to as a result of the off-payroll rules, which we'll talk about shortly as well. So the characteristics of an umbrella: all earnings are taxed at source. As I say, that means that everything you receive from the umbrella is yours to keep. It's been taxed, assuming you're using a proper umbrella. And there should be a slide in here on tax avoidance. We are tax inquiries experts in the freelancing and contracting space, and we see lots and lots of locums being targeted with loan schemes, schemes designed to pay in annuities, things where there are offshore accounts in BVIs and things. If I can give you a word of warning on this session, it would be do not touch them at all. We have around 2,000 clients who have been impacted by those historic loan schemes, and I can assure you it's not pretty. So if anyone offers you an enhanced umbrella or an uplift on your umbrella for taking a loan or something like that, either get it checked with someone such as myself or stay away from it. True umbrella should tax everything as employment income. So you'll see, we'll go through a worked example. As I say, you'll see the deductions you can expect to see in your pay slip. The umbrella will be denoted as your employer. So you'll get an employment contract with your umbrella, and the umbrella will then provide your services to practice or to the agency in return for a fee. That fee is considered the assignment fee. And another thing to note when you're working through an umbrella is the difference between the assignment fee and your actual fee that you're, or the charge out that you're charging to the umbrella. And we'll come on to the worked example to show that and how that works. The umbrella then deducts the costs of employment and their fee. That includes tax, NI, apprenticeship levy, and so on. And then they pay you the net. And as I say, everything you get is then put into your pocket. There's usually no requirement for filing a tax return, unless, of course, you have income over £100,000 or you have alternative sources of income, such as rental income, capital gains, crypto assets, any kind of income that is derived from other sources may need to be noted on the tax return. And again, we'll come on to the key dates and the tax return filing points shortly. There's no impact on IR35 because for IR35, where you are a umbrella worker, you are being taxed at source, and therefore you sit outside of the off-payroll rules. So you don't have to consider IR35. Hence why lots of agencies and lots of practices are requiring locums to operate via an umbrella. They know that all the tax is being deducted. They don't have any problems with the Criminal Finance Act. They don't have any problems with IR35. It's just simpler. And unfortunately, for many, as we discussed on the previous session we did on IR35 in isolation, that is leading to a lot of frustration in the industry and perhaps unnecessary frustration, but I'm sure we'll come on to talk about that later. The expenses rules differ to those with the self-employed locums and are certainly more restrictive. The expenses we'll come on to discuss around the self-employed allow for pretty extensive deductions to be made for things like your membership of the BVA, BVNA, insurances, those types of things. Typically, travel and subsistence was the key one that umbrellas were looking to operate with. That is no more. So now, where you can still get expenses, they will just need to be paid by the umbrella and therefore signed off by the agency or by the end client in the same way. There will just be reimbursements for expenses you incur rather than you being able to deduct them from your tax in the same way you do with self-employment. So with expenses, if you have expenses and you're using an umbrella, or you're expecting to have expenses and you're using an umbrella, make sure that as part of your initial negotiations and discussions, you can speak with the end client or agency, so the practice or the agency, to discuss how your assignment rate might be uplifted to account for the expenses you're going to incur for going to that company. So worthwhile point there on expenses. They're not the same as self-employed. Holiday pay is getting a lot of traction and attention in the umbrella industry at the moment. All the benefits of working as an umbrella, aside from administrative burden, are associated with you being an employee. Therefore, you're entitled to all the same protections that an employee is. That includes holiday pay, where you are allowed 28 days or more, depending on your contract, which is allocated to you. There are two main, now clearly when you work as an umbrella, you're acting as an employee, but you may not be there for the full term. Therefore, how umbrellas typically operate the holiday pay is there are two types, either accrued or rolled up. Accrued is where your employer sets aside your holiday pay until either you take the annual leave or you leave the umbrella company altogether, and they'll pay it out at one lump sum, or rolled up. And here your holiday pay gets added to your pay slip and paid on a regular basis, which means you're always up to date with your holiday pay entitlement. Clearly, the latter is often the most common. The reason this has taken, or this has received a lot of headlines in the industry more recently, is because the accrued model has been used in the past, and in the contracts for employment, the umbrella has indicated that it's on a use it or lose it basis. Use it or lose it means we'll keep your holiday pay unless you ask for it. And umbrellas have been skimming, in some instances, large amounts of holiday pay off of locums. So a big one for you to look out for: you are due it, you are entitled to it. Make sure none of the umbrellas you operate with operate a use it or lose it basis on your holiday pay. Look for it being either accrued or rolled up as part of your engagement with the umbrella. So another point for you to watch out for as you kind of engage on the contracts with the umbrella, and certainly the umbrellas you're looking to engage with. Cool. Sorry if I'm speeding through. There's just quite a bit to get through tonight, and I don't want to leave too much out, but I do appreciate it's a complicated topic, so do stop me if I'm going too fast.
This is great information, Rhys. Keep
Good to hear. So key tax rates for 22-23. Income to end 22-23 is the tax year from April to April, not the calendar year. Income tax rates means your personal allowance means you can earn up to £12,570 for free. No tax applied to that. The basic rate means you can earn between 12,571 and 50,270. So in total, 37,700 at 20%. When you tick over that 50,270, you're into the upper rate, the higher rate, the 40%. And then if you're lucky enough to earn over £150,000, you are then taxed at the 45% rate. On top of that, and this is perhaps one of the key differences here between the self-employed sole trader route and the umbrella route, all of it's different to limited companies, which we'll be on. but keep an eye on both employees and employers' national insurance here. Employees' national insurance, which is what you will pay as employees on income derived from employment, so salary, 13.25%, and that will be deducted at source by the umbrella, obviously. Employers' national insurance, 15.05%. Now, because the umbrella is operating as your employer, they are duty bound to deduct employers' national insurance. And when I said before that that's all built into the costs that they take off, that is also taken off. That 15.05% is taken off before they pay you the net. Now, usually, if I went to work for Vet Practice 1 and I was a full employee and my salary was going to be £30,000 a year, I would only expect employees' national insurance to come off that £30,000 a year. Where you're an umbrella worker, the employees and the employers' national insurance come off the assignment rate, which would be your £30,000 a year. So again, make sure when you're doing your calculations and keeping yourself up to date with how much you're going to earn, you take into consideration both of those and maybe account for your assignment rate accordingly. You might want to try and bump up your assignment rate to push what you are going to get. The reason I say that is because lots of people opt for considering locuming instead of the employment or salary route on the basis they're going to earn a bit more money. Makes sense, very simple, but sometimes there are things like the employer's national insurance in here, which is not counted in like for like when you're assessing assignment rate with salary. So do make sure you include that point if you're going to work through an umbrella as a locum. The monthly thresholds for national insurance, which is when you have to pay it, is up to £533. You don't pay any NI, but you don't also get any NI benefits. Earning at the lower earnings limit, 533 up to the primary threshold, you don't pay any NI, but you do get some benefits. Primary threshold kicks in at when you start earning more than £1,048 per month. In this instance, employees, NI kicks in at 13.25%, as I say. The secondary threshold, which is the employer's national insurance, is £758 per month, and that's where the 15.05 kicks in. And then there is an upper earnings limit, which is £4,189 per month. If you earn over that, anything over that point is then taxed at 3.25%. So a lower rate of NI applied if you're earning over £4,189 per month. So these are the key rates. So on to the worked example. We're going to use the same worked example all the way through, but for the expenses coming into account here. So the assumed assignment rate is £150 per day. For some that may be low, for some that may be high. I've just plucked a figure. If you do need any help in calculating things, then you can always speak to VetYou, can put you in touch with me, and I'll be very glad to help. Often don't charge for that kind of stuff. Very happy to talk through everything with you at any point. So assumed assignment rate is £150 per day. So the umbrella charges your services to the practice at £750 per week. Assignment rate key. So that grossed up is, or prorated up is £3,250 a month. In all of the examples, I haven't accounted for pension contributions. Pension contributions start to get things quite tricky when you're applying differences across umbrellas, limited companies and self-employed, based on whether you're making private pension contributions or employer contributions. So for the sake of this, we haven't made any pension contributions, albeit when you're an employee, obviously auto-enrollment, there will be pension contributions in the vast majority of instances. Employer national insurance is then deducted at 15.05%, and that includes the 1.25% uplift that we've all seen more recently, where the government asked everyone to put This is including 1.25% to pay for NHS health and social care. We won't get into the politics of that just now, but that includes a recent uplift of 1.25%, which is denoted for the NHS. So that is a deduction on a monthly basis of £311 for your employer's national insurance. The apprenticeship levy, which companies of a certain size will need to pay, 0.5%, £14 comes off. Typical umbrella fees are anywhere between £80 and £130 per month. So we put 95 here. Business expenses, obviously no business expenses as we've said here. So gross pay plus holiday pay is £2,828.90. Employee PAYE based on a personal allowance of £12,570. So first £12,570 is taxed at nil. The remaining amount is taxed at 20%, so £357.28. Employees' national insurance then comes off £265.74 and no pension contributions. That gives you a net value, net retained income of £2,206.88. So we'll keep that number in mind, £2,206.88. We will then work that through, and that will then be able to balance that against what self-employed people pay on a monthly basis and what limited company locums pay on a monthly basis, so that we can see the differences between each, so that you can at least work out the tax rates of which is better for tax before you start thinking about admin and other considerations. So moving on to sole trader / self-employed. In a self-employment position as a sole trader, you tax trading profit, but it is still all taxed as income tax rates. As a sole trader, you do have less protection than you do as an employed person. Obviously, you don't have your employer protections there. You don't have their insurance policy as the practices. Similarly, a limited company has limited liability only to the company. There are certain instances where directors can be liable, but those are quite rare. So any debts of the company are usually only left with the limited company, whereas as a sole trader, it is you are the business, you and the business are one and aligned, and therefore, unfortunately, you are exposed to a lot more risk as a result of that. Therefore, insurance is a must. All sorts of insurance is required to manage that, but insurance will inevitably be a must. Self-employed sole trader route is outside the scope of off payroll, and this is perhaps one of the most frustration, or the most common frustrations from locums I hear, is that sole traders are outside the scope of off payroll, purely because everything is taxed at source, so there's no leakage of tax, which is what IR35 is for. But a lot of practices and agencies still don't allow it on the basis that employment status becomes an issue. And the employment status means that if it's later determined that you are actually operating as an employee rather than self-employed, then we're back into those employer national insurance contributions that would become due by the practice. So there is some concern around that for practices and agencies, which is why typically they don't allow the sole trader route. Lots of agencies and lots of practices will say, oh no, it's because of IR35, which creates the confusion in the first place, because it's not. And we'll go through a flow chart shortly of what the IR35 rules say for locums. It is about employment status, and those two things very commonly get confused and crossed over. So that is typically why some practices won't engage with sole traders, are only looking for people to operate as an umbrella. There are lower rates of NIC, which we'll come on to talk to, and that's the key difference, as well as an expenses policy where you can start to make back some of the money as a self-employed person. So again, key rates are the same on an employment basis. National insurance, however, class 2 NI, you pay £0 up to 6,724, and then £3.15 per week thereafter. And class 4 NI is 10.25% up to 9,880, and then 3.25% up to 50,270. So just coming back, there's 10.2 and 3.25 and £3.15 per week. Coming back to the key rates, you can see that 13.25% and 15.05% for employment, significantly higher. So that's where you get in your differences really as a self-employed person and an umbrella worker, certainly. So again, moving back to this worked example, your assignment rate is £150, therefore monthly turnover this time, which is all trading profits of the company, or turnover of the company, I should say, 3,250. Therefore, your annual salary being 39,000, worked out on an annual basis, but I come down on a per month basis, prorated out, so don't worry too much. Again, near zero pension contribution, but this time we've got £3,000 of annual qualifying expenses. Those expenses may be insurances, printing, your telephone, use of a business telephone, engagements with solicitors to check your IR35 contracts, traveling to patients, traveling to and from patient premises. That is not traveling to and from your fixed place of work or your common place of work, traveling to and from patient sites. You can also claim for working from home allowance, which is £18 per month. So in this instance, we've assumed that you've got £3,000 worth of expenses per year, but before you wouldn't be able to claim as an umbrella unless your agency or practice agreed it. So in this instance, the £3,000 expenses comes off your turnover to create your trading profit, which is £36,000, which is then taxed in the normal way, which is your personal allowance, comes off 12,570, and then class 4 national insurance contributions, class 2 national insurance contributions is £163.80. I haven't put in here the tax that's deducted, so I'll come back and just include that in a minute, but the net pay was £28,680.77, which leaves you a per month of 2,390. Coming back to our other worked example, 2,390 instead of £2,206.88 is the current difference. So moving on to limited companies, and this is where you really start to see the differences in the rates and benefits. And this is obviously why most locums opt to, certainly where you are locuming as a career or doing it on a more regular basis, most locums will try to opt to use limited company resource. But as we'll see shortly, IR35 becomes a consideration at that stage. With a limited company, there is significantly more administration to complete. You have a company to manage, you have a company to run, you have rules to abide by as a director. Everything becomes a lot more cumbersome, but for some people that is worth the benefits that you can get from operating as a limited company. You have the protection of limited liability within the company. So as we say, usually debts taken or loans taken are or liability just to services provided are part of the company, not part of you as an individual. Therefore, if the company is dissolved, no longer trades, then usually, this is not always, there are instances where if the director's done something substantially wrong, then the corporate veil can be pierced and the directors can be pursued, but invariably liability remains and lies with the limited company. Insurance will be required. IR35 off payroll must be taken into consideration by the supply chain, and we'll come on to talk about what by the supply chain means. But the key point is that dividends can be extracted from profit, which gives a more generous tax rate. There is also no NIC at all on dividends, and then the wider expenses allocation compared to employment, because at this stage you are deducting expenses as a limited company based on what is wholly and exclusively for the purpose of the business, an important point, but you as your business owner are deciding what those expense deductions are. Key tax rates, again, income tax rates all the same if you take some salary and then some dividend. The key difference is the dividend tax rates. 0% on dividends received up to £2,000. Basic rate taxpayers pay 8.75% on dividends. Higher rate taxpayers pay 33.75%. And then additional rate taxpayers, as we come back to earlier, is 39.35%. So you can see that all of those rates are lower than the corresponding income tax rates. How you work out whether you're basic, higher or additional, you add up your total dividend income, add it to all your other income from work, so salary, and then you work out your band based on that, as we were speaking about earlier. You can see them above. So coming back to our worked example again, your assumed siren rate £150, your monthly turnover is 32, and therefore your annual salary is 39. In this instance, you have decided to take £15,000 worth of salaries. Therefore, your employer's national insurance on £15,000 worth of salary is £887. You have the same business expenses for £3,000. Your total annual company profit before tax is $20,112. Corporation tax deduction, CT deduction, comes in here of profit, which is $3,821. Profit after tax, $16,290. You'll pay £1,250 on dividends. You'll pay £169 on the salary element, and your net pay, therefore, £29,870.40, which is £2,489.20 per month. So £2,489.20 per month coming back is 2,206, quite a bit more than umbrella, quite a bit more than self-employed, and hence why limited company contractors or locums tend to take home more. So, key dates. These are your responsible dates for you making sure that you file and do the right things at the right times. Personal tax filing deadline is the 31st of January if you're filing online, which I'm certain that most people on this call will, if not all. You then pay your tax on 31st of January at midnight. You then pay your first payment on account, which is usually 50% of the tax that you pay again to account for the next tax year. You then make your second payment on account on the 31st of July. That's the second 50%. And then you work it through all over again. On a company tax basis, you file your company accounts with Companies House 9 months after your company's financial year end. Your company's financial year end will be from when you register it. So if I register mine tomorrow, then my company year end will be June. So you'll have 9 months from the end of June each year to file. Pay your corporation tax at the same time, and you file a company tax return 12 months after your accounting period ends. Your VAT is only accounted for where you earn, or you expect, where you realise that you're going to earn over £85,000 of VATable turnover on your company per year. If you think you are going to earn more than £85,000 from a VATable exercise from locuming, then you need to be registering for that, and that needs to be done within 30 days of the date you realize you're going to hit it, by the way. So for example, if on the 1st of May, you knew you were going to get a contract on the 30th of May for 100 grand, be nice, then you need to register by the 30th of May. You're not registering 30 days after the 30th of May because you know that that contract is coming. That's HMRC's guidance. That's usually paid quarterly, monthly or quarterly, usually very commonly quarterly, the deadline for which is 1 calendar month and 7 days after the VAT period. So that's on quarters. So for example, the quarter ending 31st of March, your return would be submitted and payment cleared in HMRC's account by the 7th of May. Right, MSC is something which has become, again, very, very newly important. It's newly important because HMRC are looking at it. It's been important for a while. Let's clarify that point. But it's important to include in this slide deck with MSC, which is Managed Service Companies. Now, I put there in the top line, important because nobody likes doing taxes, not even us as tax advisors. Nobody likes it. And as a result, especially locums who are unbelievably under pressure, busy all the time, working all sorts of hours of the day, same as a plumber's taps are always leaking. No, that's not the same analogy at all. My apologies. That's where tax advisors' tax returns are left to the last minute. But what always happens is that everything is left till the last minute, always. What we can stray into where everything is left till the last minute is a heavy, heavy, heavy reliance on our accountants to get things done. Understood, completely understood. However, managed service company rules come in to effect where it is the case that the accountant is seen to be running the company. The accountant is either involved in a way which influences or controls the decisions of the company, and as a result is seen by HMRC to be influencing or controlling how the company is being run. So if, for example, you say, I can't do this, and your accountant says, don't worry, I'll take it on, I'll send your timesheets out, I'll work out what dividend rate you should be paying, I'll then log into your bank account and get it paid for you and run everything for you. That is often presented as a very helpful accountant, and I understand that, but that is a very risk-based accountancy engagement. And the reason for that is MSC rules kick in to apply here. And the MSC rules say that where the accountant is seen to be involved or by influencing or controlling, along with a load of other criteria, but this is a whole webinar in itself, so I've just put a simple slide here, where they are seen to be controlling or influencing the finances of the company, then all of your dividends get reclassified as income, and you have to pay income tax rates where you've already paid dividend tax rates. And HMRC can go back historically 4 years from the end of the tax year to recover that. So the key importance there is that unless the rules for liability shifting apply, the accountant is not the liable party. You are, your company is. And so the accountant can be as friendly and as helpful as they want to be. They can offer all the assistance in the world, but it is you that is at risk of creating a higher liability on yourself, a retrospective liability, by letting that accountant do that and go that far. So you need to be super careful that you're not straying or not allowing your company to stray into the MSC rules. And as I say, the reason I'm raising this, particularly now, is because very recently, as in kind of 4 months ago, HMRC sent out 2,000 demands out of the blue, over 2,000 demands, out of the blue to contractors, demanding huge amounts of sums to be paid within 30 days as a result of these MSC rules. So it's something that HMRC are looking at. I have a number of calls with HMRC about their policy on it on an ongoing basis. So we'll see what they intend to do with it. My view is that they're trying to test the boundaries on a very kind of vague and wide piece of legislation, so that they can then apply it more widely. We'll see what happens, but it is something to be conscious of, and it's just something that you don't allow yourself to slip into. Unfortunately, it's another area of risk warning for locums that we have to all contend with. So just a quick word on that, really. Any questions on that, or if anyone wants any more depth to that position, please do let us know. So IR35, where are we on time? Oh gosh, right. Let's get into overdrive. IR35.
Rhys, sorry.
Yeah, sure.
One question about CEST tools. Do you want me to ask now, or do you want me to
about
ask
what? Sorry.
CEST, the assessed assessment.
Yeah, sure.
Yeah. So it says, do I need a new CEST assessment before each contract if I've already had one, or if I'm returning after a later date under a new contract, do I need a new one?
So the CEST tool, Check of Employment Status tool, is a tool that HMRC provides online, which determines the status of everyone's employment or otherwise. And what that does is run through the terms of the contract, the working practice arrangements, and then says whether you are deemed to be an employee or whether you are outside IR35, which is deemed to be self-employed. And we'll talk through the IR35 points before. But to answer your question, yes, every single contract you go into must have what's called a status determination status carried out before, or status determination statement provided before the contract begins. Now, the responsibility on who is to do the CEST determination and who is to provide you the status determination statement is up for debate. And we'll come on to talk around that through a flowchart in a minute. So it may well be that you don't have to do it, but a status determination statement, which is the output from the CEST tool, has to be done every time you engage in a contract. Yes. Similarly, if you do a contract, you go away for 10 months and you come back to largely the same contract, that's absolutely fine. And the CEST tool should be very quick to fill out and will most likely be the same. But in order to protect yourself, spend half an hour getting it done. 100%. Always just get that ticked off. We go into arguably overdrive on that one. We upload all of our CEST determinations. We don't use CEST, but we upload all of our IR35 determinations onto a blockchain so that it's irrefutable proof that those things happened, and those things happened on that date at that time before the contract started, so that HMRC can check historically, let's say 4 years time, they can check that that contract, that PDF was created on that date with those answers, and it hasn't been changed since. So I really, really encourage you to do those CEST determinations at every go, just to make sure you're protected if HMRC ever come knocking. But as I say, we'll go through a flowchart, which I hope will help in that. Cool. Any other questions, Bonnie?
No. Go for it.
Well, that's either really bad or good. I don't know which.
I think you've blown a lot of people's minds, but you know.
It's not me. It's not me. It's HMRC. Right. Some myths coming from our last session that we did on myth busting IR35, which is probably the most interesting way that you can give a title to IR35. It isn't new. It has been around since 2000, but the new bit is the off payroll, and that's the bit that's got everyone twitchy. My view, my personal view, and this is of a lot of advisors, IR35 presents a huge commercial advantage for practices and locums that get it right. And I think generally speaking from the locum industry, lots of locums acknowledge that. They appreciate that there's a huge opportunity to operate as a locum, especially on an outside IR35 basis, and practices can get really, really, really good talent, particularly small practices that get it right on IR35, can get really good talent that big practices just will not do because of their more strict policies. So those that get IR35 right and prepare for it and plan for it and put it in place properly have a huge opportunity commercially and just generally as way of working. Skilled locums clearly have greater flexibility and earning power. The off-payroll reforms do not apply to everyone, as we will come on to explore. And there is, as always with this kind of stuff, we had it with GDPR as well. There's a hell of a lot of misinformation and over-assessment and panic that's coming out. We're definitely seeing and I'd be interested to hear from you guys actually, if you're seeing more opportunities on an outside IR35 basis, or whether you're seeing changes or softening in the approach that agencies and practices are taking, or whether you're just seeing a continued kind of not our problem, operate as an umbrella. I'd be interested to hear what people are experiencing in that. IR35 reforms, so off-payroll reforms, were created as a bit of an attempt at a masterstroke from HMRC to change the party responsible for making the status determination. Before off-payroll, the limited company, i.e. the company and the person that was getting the benefit of the contractor operating outside IR35 was making the determination. There is an element of checking your own homework in that, and that's what HMRC didn't like. They don't like you as a contractor deciding that you're going to operate through a limited company. Instead, what they did was push the liability and responsibility up the chain. And what that means is that instead of 100 contractors to go after, they now have one practice with 100 contractors to go after. They streamlined their inquiry process. They made it more real for the practice in terms of the penalties and the exposure that practice could expect to get. And they forced it up the supply chain quite neatly as part of the off-payroll rules. What you've therefore seen is that where practices were very happy to have 100 contractors, or who were taking their own risk on IR35, now that practice has 100 contractor risk on IR35 and is therefore making policy decisions which say, we're not going to take that risk on, we're not prepared to put anything in place to do that, therefore we will do the most risk-averse route, which is typically to just say work as an employee or through an umbrella where everything's taxed at source. So that's why you're getting those policy changes. It does require a joined up supply chain because it requires every party to talk to each other properly throughout the process. And it has increased the requirement for due diligence to be conducted for everyone. So who does it apply to? Now, I'm going to try as best I can to be a little bit techie. So please bear with me. Let's see if I can do this. Can you all see the flow chart?
Yes.
Oh, yes. I'm happy with that. Right. Let's hope you can see this flow chart though. Can you see the flow chart moving?
Very slowly.
Excellent. Right. So this is the flow chart that's been made available to all VetYou, all of VetYou's community. I still find it super useful to talk through. And obviously, I think this is available on VetYou's website. If not, it's definitely available if you ask of it, ask for it from them. But what it talks through is your obligations or as a locum operating with IR35. So you start here, it is interactive, so you can click on these and they will take you to the outcomes. You start here and you say, are you operating as a PSC, i.e. a limited company, or a partnership? So coming back to our discussion earlier, no, I'm operating as an employee. No, I'm operating as I'm through an umbrella, or no, I'm operating as a sole trader. IR35 is no, outcome one. Outcome one is the off-payroll rules do not apply to you. You have no liability under the off-payroll rules because everything is being taxed as PAYE at source, and therefore PAYE workers are subject to different legislation. So for the sake of this discussion, and this is something that I have spoken to lots of locums about, that they have used this. We also created one for VetYou on rights and responsibilities flowchart for practices, and we also created another one for recruitment agencies. So these are really helpful tools for you to, if you disagree with the IR35 decision that has come out of your practice or agency, sometimes, and definitely had feedback from locums, that this has been helpful to talk through with them so that they can see each stage of how this applies. So I'm hoping that this is a useful tool for you. So
the chat, the links are in the chat.
Excellent, great, thank you. Are you operating as a limited company or partnership? Let's go with yes. Is the practice that you will be contracting with a small company or wholly overseas? Now, you can click there, but I'm not going to risk that, given I'm surprised I managed to do the technical part so far. So a small company, the small company exemptions applies to companies with an annual turnover on this, they have to hit two of these three: an annual turnover of less than 10.2 million, a balance sheet of no more than 5.1 million, and have no more than 50 employees. Often what you'll get is there will be, it will be very clear that that's not the case. If you're going to work for one small practice with kind of 10 employees, 15 employees, it will be very obvious. Where you're working for bigger corporates, it will be less obvious. Therefore, you may need to ask them. You may need to ask them if they've taken into consideration IR35 and whether they are applying the small company exemption here. There is a slide for this, so when we come off and go back onto this slide, you'll see it. But remind those again, there is not an annual turnover, or there is an annual turnover of less than 10.2 million pounds. There is a balance sheet of no more than 5.1 million pounds, and it has no more than 50 employees. It has to hit two of those to benefit from the small companies exemption. In the event the company is a small company, outcome 2 is applicable. If the practice is a small company or wholly overseas, the IR35 rules, i.e. the previous IR35 rules, Chapter 8 rules, prior to off payroll apply. And that means that you, as your limited company, decide the IR35 status, and the liabilities for any unpaid tax associated with that sit with your company. So coming back to the question we had with, do I need to complete a CEST review on every contract? If the practice you are engaging with is a small company or wholly overseas, the answer is yes, you will have an obligation to complete the IR35 determination, and you will consequently be liable for getting that wrong. So let's assume, for the sake of this, they are contracting with one of the big boys, and it's clear that they are not benefiting from the small companies exemption. No, the practice must, and that's the vet practice themselves, not your PSC, must determine IR35 status using reasonable care, and they must communicate to you a status determination statement. Coming back to what we said, a status determination statement needs to set out the basis of the determination, so whether the contract is inside or outside IR35, the reasons that those have been reached, and that needs to be communicated down the supply chain. So if there's an agency in place, it needs to go to them, then needs to move on to the PSC as a last port of call. Needs to be done before the contract begins. Again, the locum industry, I know what it's like. Everything's left to the last minute, and sometimes contracts are not even signed, let alone signed before the engagement. So I do understand that. However, always try to get a contract and an SDS before you begin the engagement. And that's going to be, examples of that are going to be super important or super helpful, where things like what Molly is planning are going to come out. So do listen to what Molly said at the start of this call, and keep up to date with her plans, because that is trying to put that in place and make sure all of these key things, which are super important to the contract and super important to protecting you, are adhered to. They are so commonly not adhered to. And unfortunately, as locums, you are right at the bottom there, and you're the ones that are taking on the liability and the indemnity unnecessarily so. So these kind of things that Molly is talking about putting in place, which you'll see soon enough, really will help you have a much greater voice as a locum. Got to get all of this stuff tight and get these SDSs done early doors and get these contracts in place before the contracts begin. So question, have they done this? Have they passed you an SDS? Outcome 3, action none, because the liability is now with the practice. The practice has not passed you an SDS, and therefore they have invited any liability for incorrect tax assessment on themselves. So you don't technically need to do anything. You may wish to tell your practice that they are not doing the right thing, but invariably you don't need to take any action. The practice is liable for an incorrect assessment at this stage. Assuming they have done that and the determination is inside IR35, you got to then ask a question. Do you agree with the determination? If the answer is no, you can invoke a disagreement process, which we will come on to talk about shortly. If the answer is yes, then is the PSC being supplied by an agency? So is there a recruitment agency placing you in the chain? If the answer is yes, the agency ensures the payments are compliant. So the agency will be duty bound to deduct any PAYE from there for an inside IR35 determination. And the liability will sit with the agency, not the practice, not your PSC. The liability is with what's called the fee payer, which is the one entity above your limited company. If the PSC is being supplied to the practice not by an agency, then the practice must ensure that all payments are PAYE compliant. The practice must deduct all tax and national insurance contributions along with the apprenticeship levy. This is on the basis it's an inside IR35 determination. The determination otherwise is outside IR35, and again, do you agree? Answer no. Disagreement process. Is the PSC being supplied by an agency? No. The practice will pay the PSC the gross amount, so you'll get the whole assignment rate amount. Your then obligation, coming back to what we spoke about earlier, is to deduct tax for salary, and then you will personally deduct tax for dividends on your tax return. The liability is the fee payer, again, for an inaccurate outside IR35 determination, and the practice will be liable. Here's why lots of practices don't want to engage in outside IR35 anymore, because if they make the determination wrong, they're not liable for you. But a big thing we're seeing is that there are indemnity provisions in the contracts between the PSC and the practice, which say that the PSC is now liable. So again, when you're signing those contracts and getting those squared away, make sure you have your contract before you start, you see what you're being made to be liable for, you see if it's onerous, and if it's onerous, you disagree with it and you get into contract negotiations. Again, if you don't sign a contract, then there can be an assumption that you have signed up to the practice's terms and conditions. And if they have terms and conditions which say you're liable for any tax that's later deemed to be due, there's an argument to be had there. So this is another real importance to get those contracts signed and put in place before you begin your engagement. If there is an agency, again, as the fee payer, the agency will be the liable party, but again, the agency will pay the PSC without any deductions. So I know I've whizzed through it, but that I hope is a helpful kind of summary of all the steps of whether or not I need to comply with IR35 as a locum operating through a limited company, and what I need to do. Again, VetYou have copies of this, the agency's version and the practices version. I'm just gone through the locums version tonight, given the topic of conversation. So hoping that helps. Okay, let's try again. Back to this one. Cool. Okay, so flowchart discussed. There's a summary there of the small companies exemptions. I won't dwell on those too much. Right, how is it assessed? I don't propose, given the time, to go into the real detail around IR35 and how it's assessed. However, I did do a detailed appraisal of how IR35 is assessed on the IR35 myth-busting session that we did. All of the points raised there remain viable, accurate, up to date. And so I think the link was included in the reminder to this session.
In the chat too.
In the chat too, fantastic. So you have all of that already available to you. So unless anyone disagrees with me, I'm gonna move on and not talk around the depth of IR35 on this session, other than to just say those are the kind of 4 pillars that we observe as IR35, which are discussed in the other webinar. So coming back to that point, can I disagree? This is a question that's asked very commonly. Lots of locums disagree and say they're operating on an outside IR35 basis, where the practice will say they're operating on an inside IR35 basis. The answer is yes, there is a formal disagreement process that needs to be put in place by the practice and the agency. However, and this is a big however, there is no disagreement process enshrined in legislation. So unfortunately, you can disagree, but then the practice can say, well, no, I disagree again. So it lacks a little bit of teeth. There are alternative ways that you can challenge IR35 determination via the tax return. But again, that's going into some real detailed points there. So I'm going to steer clear of that. And if you do want to discuss those in more depth, please do let us know. But the practice does have an obligation to put a challenge disagreement process in place, and the practice needs to respond to any disagreement appeal within 45 days and does need to set out a justification for the decision or issue a new SDS. Now, the reason I'm saying this is worthwhile considering is because where there are blanket assessments applied, which is very commonly the case, where you're seeing a practice say, well, everyone's IR35, inside IR35, or an agency say everyone's inside IR35, they are applying that policy on the basis it's easy. What you can force with the status determination or disagreement process, is you can force them to look at the specifics of the working practices and the arrangement and force a decision, because they have to set out the justification for that decision. So what that means is that where they're applying a blanket policy and just saying, well, everyone's inside IR35, what they then have to do is set out the reasons for you being inside IR35, which cannot just be everyone's inside IR35. So by using the disagreement process, you force a closer look into the working practices, which often helps. It does often help. And where you can use in that disagreement process a completed CEST form, for example, which shows that you're outside IR35, some decisions as to why maybe an independent tax advisor has run an IR35 review on your case and working practices and contract and has determined it to be outside of IR35, where you can show all of that supporting information, you stand a much better chance of getting a better outcome than you do by just saying, I disagree. You can make that disagreement process within at any point in the contract as well. So it doesn't need to be done straight away or when you get the SDS, it can be made at any point. As I say there's no independent appeals process, but it does force a closer look, and disagreements can be verbal. So one for practices to watch out for. So again, that's a very quick run through of all things IR35, and I am done. I promise I will stop talking about the boring stuff, but hopefully it's helped. Hopefully it's given a little bit of clarity and not created more confusion. But as I say, if there is any confusion, I'm here and I'm ready for any questions. But likewise, if you want to digest that and seek out some more help, I'm always open to a call and a chat and talk through everything. And it's certainly the case that all VetYou community members have a free consultation with us. So do make the most of that. Lots of people have spoken to me from these sessions before, and they've proven to be helpful, I think. So please do take that up. That's me.
Rhys, not since Spike Milligan did Jackanory have we had such an attentive audience. So that was absolutely awesome. Thank you so much. We only lost one person along the way who was very, very thankful. So super informative. I realize we've gone over time, but I'm very happy for us to stay on if anybody has any burning questions. There's one or two that I'd love, Rhys, if we can have some quick fire. We had one or two people ask us some questions ahead of the event. I don't want you to go into a lot of detail, but if there's a one-word answer or one sentence answer, we'd love to hear it. If not, we'll send them your way after this event. So the first one was, do the same rules apply for locum taxes abroad?
Well, okay. So there's not a one-word answer to that. If you are, it depends where you are tax resident and where you are carrying out the work. The tax rules on IR35, for example, if the practice is duty bound and has a UK presence, and they are then duty bound to adhere to IR35 rules. Same way, for example, if you've got a vet practice operating in America that has an office over here, be that 1-2 people, then the IR35 rules look to apply. If we're talking about the tax rates and everything, it will depend where you are tax resident, where you are based, and where you are operating the work. That is based on what's called the statutory residence test, which runs through a very clear checkbox of things to determine whether you're UK tax resident or not. So the answer is no, there's not a quick answer to that. But I can very easily get to the answer for that person by talking around their own specific circumstances and just chatting things through.
Great. Two more quick questions then. Cars, is there one structure better than the other for a vet that needs a car for work to be able to put those through a vehicle?
If the car, operating through an umbrella, you are very unlikely to get a practice to pay for your car. So I would say that is entirely unlikely. Being perfectly frank, the rules around or the benefit tax rate on benefit in kind value on company cars these days don't really give you any benefit other than fully electric vehicles. There are still some very enticing opportunities for benefit in kind value on electric cars that can be considered. Those are obviously only considered where you are operating as a company and must be wholly and exclusively for the business as well. So again, it's going to depend on your own circumstances, but I would say honestly, it's difficult to get a proper benefit from owning the company on that basis. It may be that Rhys can help us out with that question, though. I don't know if you want to. Rhys might know the answer. I might put her on the spot, though. I probably shouldn't do that.
Can you repeat the question again?
Is there one particular structure as a locum that you find more tax advantageous around running a car?
Company cars. Running a car is different. Obviously, when you're talking about running a car, you're talking about traveling expenses, and as we said, traveling to and from practices can be deductible expenses, cannot for traveling to and from work.
Yeah.
I was more talking about the acquisition of a company car, which I don't know if Ruth, you have any
But like a
thoughts on,
limited, I get a lot doing it through limited.
yeah, exactly. Yeah.
A lot.
Right.
Yeah. Benefit in kind value good though?
Yeah, it does, especially on electric cars as well, massively. So I'd have to,
Speak to them individually.
But yeah,
I
it is.
did. I put you on the spot. My apologies. That is cruel of me. But,
I'm going to,
I defer to your greater expertise on that one.
Chairman's prerogative. I'm going to move to the last question of the evening, which I think is really pertinent for those 30 people that have still held on. So great. A lot of questions around portfolio careers and about putting income through a limited company and maybe an umbrella or as a personal tax return just to suit their own personal circumstances. Comment on that, please.
Lots of that happens, and it's certainly the case that if I can work for a practice on an outside IR35 basis, but I have to work through an umbrella on another basis, then so be it, and that's how I'll operate. There are lots of tax planning considerations to think around that. Some people like everything to be paid into the limited company. If the amount paid into the limited company has already been subject to income tax, then that can come out, income tax as a result of IR35, it can come out into your bank account for no further tax because full tax has already been paid on that amount by both the company for any liable taxes there. So lots of people like to kind of mix it all around in the limited company and then use the limited company on an ongoing basis to make purchases for the business. So things like laptops and things like that. So there's a bit of that, but you can run a limited company for this part of your work and you can operate as an umbrella for this part of your work. Clearly, the big thing to think about is where you fit into those, and I'll come back to it here. Can you still see the screen though?
Yes, we can.
For the dividend rates, you're coming back here. So then what you're getting is here in our example, we only took £15,000 salary. But if you take £40,000 salary for your umbrella, for example, then you're going to be pushed up into these higher dividend tax rates. So you're going to be paying a higher rate of dividends. Where all the money is paid into your limited company, you can control the flow of that money over time as and when you need it. And then you can plan a little bit more for the tax rate you're going to be paid. Where you have lots of different sources of income coming in different ways, it becomes much harder to plan for the tax rate you're going to pay, which is why everyone likes to try and keep it all within the limited company. But if you've got lots of different pathways, then yeah, by all means do it, but just take account of the tax changes that's going to happen as a result of receiving more salary. One thing that we always, you'll hear lots and lots of time with the in the tax profession is don't let the tax tail wag the dog, which is probably apt for the vets and nurses we're talking to, which is important here. So don't always try and assume that you've got to get the best tax rate. Sometimes it's best to get the contract, it's best to secure the contract, it's best to take the hit on the national insurance contributions or the higher tax rate, just get the contract secured and earn money, especially in the times we're living in. Other times there are good opportunities to plan and prepare well in advance, but sometimes you just need to get the contract secured and crack on with it. So yeah, portfolio management is management in the truest sense. It becomes a lot more tricky, but sometimes it's needs must.
Rhys, I think that is a wonderful place in which to stop. And thank you so much for a very engaging presentation this evening.
Excellent.
So much information. We normally gift £10 to a chosen charity for any jargon that gets pulled out.
Yeah,
we almost went jargon free the whole of the evening. Considering how in depth and detailed your presentation, that was fantastic. So thank you so much. I've been putting in the links in the chat, all of the links for all of the resources that are available this evening. We will be sharing a recording of this event as well next week. You can also get in touch with us at VetYou if you want any more information. I've put links through to our wonderful IFA, Ruth Downs. You can also contact Rhys through the VetYou website and through our email. And also Molly's links have been put in the chat as well, if she can help you and assist you with your life as a locum. So really super excited to have had you this evening. So much information. I can see a few people having to drop off now, but it was wonderful to have you along. Thank you so much. And please stay tuned. We have some great events coming up. Again, particularly those focused on those freelancing or locum. We've got an event on mortgages on the 26th of July, which can help out pretty much anybody in the veterinary profession looking to fund their first house. And a very important one in August, which I think again is super relevant to today's profession. How can I run a side hustle? And I'm sure there's more than one of the people attending this evening that can do that. So look out for those events. We're looking forward to inviting you along again in the future. Just a final word to say thank you so much to all of our speakers, but particularly to Rhys for a super informative presentation this evening.
Awesome. Thank you, everyone. Sorry, Ruth. Take care, everyone.
Thank you very much.
Thanks, guys.